when longer term interest rates are higher, then the money's starting to run out. And finally, that is what
You're watching Silver News Daily. Subscribe for more.
Did you know we're in the longest yield curve inversion in recorded history? It's a flashing red warning signal for an impending recession, rising inflation, and the collapse of the fiat monetary system as we know it. But here's the twist. Amid this chaos, silver is emerging as the ultimate financial lifeline. Stay with me, because by the end of this video, you'll understand why silver isn't just another investment. It's your best shot at securing wealth when everything else falls apart.
it's going up, right? Except what it's slowing down. It reaches its apex point, and then it starts falling. And once it starts falling, the higher you throw it up, the harder it's going to come down. So an inverted yield curve is basically saying everybody is immortal. Everyone can borrow and lend money at phenomenally low interest rates, because since we're never going to die, what's the point, right? That's denying our mortality. And you can do that for a while. You can pretend that you're immortal and you can do crazy things, and maybe you'll survive for a while, but eventually your energy is going to run out. You're going to get old. Your limbs are going to shut down and you're going to die. Well, all of us are. And so the longer we deny our mortality, the stupider we're going to do things. We'll do crazy drugs. We'll take crazy risks, and we could end up dying early or doing something stupid. So that's the economic equivalent of that is living in an economy with a negative yield spread. Right? It makes you take stupid risks that you shouldn't be taking. Like, for example, buying assets that don't exist. Everybody knows what I'm talking about. It's nuts what's going on. Or starting wars that you can't afford to pay for. There's wars all the time. And starting potentially World War III in a bid to keep the economy going. I mean, you can't get much crazier than this on a planetary scale. So thank God we're out of this negative yield spread, which is causing not just monetary insanity, but academic insanity, all this money going to every crazy place in the economy that you couldn't possibly imagine would exist. I always bring the example of like peak insanity is like child mutilation surgery. Those things are funded by inflation, by government. It's just, this has got to end. And it's going to end by among other things, the yield spread going positive, to plug it back into basic economics.
The yield curve inversion. What does it really mean? For over 2 years now, long-term interest rates have remained lower than short-term rates, an anomaly that has signaled almost every major recession in modern history. And this isn't just any inversion. It's the longest we've ever seen. Historically, within 3 to 6 months of this inversion correcting, a recession is almost inevitable. Why does this matter now? Well, just look at what's happening. Global debt levels are at all-time highs. Central banks are struggling to contain inflation, and the cracks in the system are becoming harder to ignore. From 1990 to 2008, similar patterns led to catastrophic financial crises. But today, we're facing a convergence of unprecedented pressures. The question is, are we prepared for what's coming? The signs are clear, but the real challenge lies in what we do next. And before we move on, don't forget to subscribe if you want to stay ahead of these critical economic shifts. Now, what does this mean for your wealth? Let's take a deeper look in the next segment.
Causative. Right. So I'm looking at the chart here, back in Fred, and the yield curve inverted, at least on the 10-year minus 3-month spread, it inverted on October 25th, 2022. So we're 2 years and 2 months into this. And the next longest one was to 2008, right? And I'm zooming in on that right now, and I'll tell you that the inversion lasted from July 14th, 2006 to June 4th, 2007. You could stretch it out because it kind of wobbled up and down for a few more months after that. So the latest day is August 10th, 2007. So we're talking about a year plus change in months. So that was 2008. Before that, it was even shorter. And before that, it was even shorter. 2000, I'm looking at it right now, was from June 2000 until January 2001, so less than a year. And before that, in 1989, it was from May 1989 until November 1989. So about what is that? 511. That's about 5-6 months. So about the same as 2000. The analogy that might help you understand this: why should it be that a yield curve inversion that is longer would yield to a bigger financial catastrophe or a financial crisis? And if you think of I got this analogy from my friend Phil Lowe of the Bitter Drafter. I think Dunnigan had interviewed him a week or two ago, and he's up and coming. He's a good friend of mine. He thinks a lot like me, or I think a lot like him. And he used the analogy of throwing a ball up in the air, to imagine or to make it look like you've broken the law of gravity, right? If you throw a ball up really high in the air, it looks like there's no gravity because.
Let's talk about the elephant in the room, fiat currency. For decades, central banks have relied on money printing to cover deficits and stimulate economies. But at what cost? Inflation is eating away at the value of every dollar, euro, and yen, and trust in these currencies is eroding faster than ever. The truth is, fiat money has always been a fragile system. Governments can print as much as they want, but they can't print trust. The longer they kick the can down the road, the worse the fall it will be. We've already seen this in nations like Venezuela and Zimbabwe, where hyperinflation reduced their currencies to mere paper. This brings us to the real question. What happens when the same cracks appear on a global scale? Enter silver, a tangible, decentralized asset that no government can inflate away. Unlike fiat, silver's value doesn't depend on promises or policies. It's rooted in scarcity, utility, and trust that spans centuries. So, as the fiat system teeters on the edge, why is silver uniquely positioned to thrive in the chaos? We'll uncover that in the next step.
Seeing the yield spread go above zero and go higher and higher and higher, that means that that longer term interest rates are rising, which means money is getting tighter. It costs more to borrow, which means money's running low, right? So it's sort of like it's like a chicken and egg question. When you ask the question, when the Fed cuts interest rates, right? Does that cause a higher money supply, or does the bigger money supply cause the cut in interest rates and the Fed's just following it down? And it's really a chicken and egg question. But what we do know is that when longer term interest rates are higher, then the money's starting to run out. And finally, that is what is happening. And judging by history since 1990, which is really when the fiat system started to heat up, right? If we count the beginning of the fiat monetary system in 1971, then really from 1971 to about 1980, 1985, the central bank was still trying to gain control of the system. It didn't really have it yet. And then by 1980, 1985, they were able to gain control of it as to where we are now and get things going. And now we're at the end of the ride here. So counting from 1990, when the fiat system, the fiat dollar standard, as we were all familiar with, started to really gain some strength and gain some momentum, then from that system on, we have about historically 3 to 6 months before the next recession is triggered, and the strength or the severity of that recession, financial crisis, these are all the same words, will be in proportion to how much debt is going to default and how many people that thought they had money no longer have any. And this is going to be worse than, or better, depending on where you're positioned, right? It's going to be worse if you don't have money. It's going to be better if you do, than any other recession that we've ever seen or experienced, I think, in American history or even world history, because we've never done anything like this before.
Silver's role in economic history is nothing short of legendary. For thousands of years, it has been the go-to asset in times of uncertainty. From ancient civilizations to modern crises, silver has consistently held its value when currencies and economies crumbled. Take the Great Depression, for example. While paper money lost its purchasing power, silver remained a stable store of value. Fast forward to the 1970s, when inflation skyrocketed, silver prices surged, proving once again its reliability as a hedge. What makes silver so unique? It's more than just a commodity. It's real money. Unlike fiat currencies, silver's value is intrinsic, not dictated by central banks. Its durability, divisibility, and universal acceptance have made it indispensable during financial upheavals. But the question is, can silver repeat its history as a safe haven in today's volatile economy? As we explore its industrial importance and rising demand, the answer might surprise you. Let's dive into that next.
Accidentally on Friday, actually. I mean, I track the yield curve, I track the spread, but I don't check it every day. So I knew we were heading close to some people say uninversion, but that sounds kind of off or unprofessional. So I guess the better way to put it is a normalization. Or you could even argue that it's not quite normalized yet, because even a yield spread or a spread above zero, by which we mean that short-term yields are lower than long-term yields. Like it costs more interest to loan out to borrow money for 10 years than it does 3 months, which that's what it should be, right? Because we're all mortal and we all have a limited amount of time. So the more time that you are separated from your money, the more you should be compensated for that. So the spread between the 10-year and the 3-month treasury bills and treasury notes is now, I'm looking at it on Fred right now, it's 0.06. So you get 0.06, you get 6 more basis points of yield for lending out your money for 10 years than you do for lending it out for 3 months, which this is not quite normal, but it's above zero at least. It acknowledges that at least we're mortal, but if you only get 6 more basis points for lending out money for 10 years and you do for 3 months, then I guess, our lifespans would be like maybe 2,000-3,000 years, something like that. Maybe more. I mean, I haven't plotted it on a calculus integral, whatever. But the point is, okay, getting back to Earth here, or wherever it is we are. We're back above zero. So what I did is I took a look at the 10-year minus 3-month yield spread, and I looked at the recession shaded areas. And I'm looking at the chart right now, which is why my eyes aren't looking directly at the camera. And the last 3 recessions, we have 1990, 2001, and 2008, which we all know about. It's somewhere between 3 and 6 months from when the spread goes back above zero to when the next recession is triggered. And the question that people ask me is this organic or is it causative? Is it that, that's okay. I'll just leave it there. My helicopter bin fell off. Maybe that's ominous. Maybe that means that we're ending this printing cycle. Could be. So is it causative? Is it that the yield spread goes above zero and therefore that triggers a recession or triggers a financial crisis? Or is it just correlative, right? That the fact that money is tightening means that interest rates are going higher, and it's the tightening of the money and it's the tightening of bank lending, right? If interest rates are higher, less people are going to borrow money, and then you're going to have less grease in the wheels of the Keynesian economy. And then that's when debt starts to default. Then you have the slowdown, then you have the crash. And that's when all purchasing power kind of flows into gold and silver. Whether it goes up and down in dollar terms is a separate issue. And I don't think it's causative. I think it is, it's just correlative. That when you start...
Silver isn't just a financial asset. It's a workhorse of the modern world. Its unique properties, like unmatched conductivity and antibacterial qualities, make it a cornerstone of critical industries. And here's the kicker. The demand for silver is skyrocketing, especially in cutting-edge technologies. Think about the booming green energy sector. Solar panels, a key component of the global energy transition, rely heavily on silver. Every panel installed is driving up demand. Then there's the electric vehicle revolution, where silver plays a crucial role in battery technology. And let's not forget its use in medical devices, electronics, and even water purification systems. Now, Here's where it gets interesting. Global silver inventories are shrinking. As industries stockpile and consumption outpaces supply, we're seeing a perfect storm for rising prices. Analysts predict a surge in silver demand through 2025 and beyond, fueled by the green energy boom and recovery in manufacturing. But with silver being both a financial safe haven and an industrial necessity, how does this dual role impact its future potential? We'll explore that in the next step.
So the issue of central banks buying gold. So let's put it into perspective, right? It's when central banks buy gold to back their currencies, central banks print currency a lot faster than they can possibly accumulate any gold. And I'm not saying they're not accumulating gold, but sometimes, and I don't know about India's case specifically, but when gold bugs tend to talk about central banks buying gold, and then they're, oh, this is going to raise the gold price and we're going to be rich. I mean, if you look at a central bank like Turkey, they buy gold, they sell gold. They buy gold, they sell gold. It goes up and down. It's like, it's crazy. And who wants the Turkish lira? Nobody wants it. Right? It's dead. And it didn't matter how much gold that they bought. So it's not an issue of how much gold a central bank has. The issue is, do people trust that its liabilities, which are its currency, the currency is a liability of the central bank. That's the definition of what a currency is. Are the people going to trust that if they hold this paper liability of that central bank, that they can redeem it for the gold that's on the central bank's balance sheet? I don't think anyone would say that that is even remotely possible. It's not. So I don't think it even matters at all how much gold or silver or real assets a central bank even has. Because once they destroy the currency, the faith in the liability issuing group, which is the central bank, will be lost. And they'll have to sell they'll have to make it convertible if they want people to use their disgusting inflated paper. And in order to make it convertible, they've got to stop printing. And if they're going to stop printing, they're going to have to allow their banking clientele buddies who they control, they're going to have to allow them to crash and fail. And then at that point, their lives get in danger because the people that they control really control them, right? You know, it's like it's an expansion of that saying: if you owe the bank, $1,000 or $10,000, you're in trouble. If you owe the bank, $1 billion, the bank is in trouble. So if the bank's clients get in trouble and they need inflation and they can't get it because the central bank is saying, oh, well, we have to restore confidence in our currency, so we can't inflate anymore. Well, then the Federal Reserve Board, or whatever the equivalent of that is in India, could get lynched. It's very possible.
When the world is in turmoil, people seek safety, and silver has always answered that call. Just look at the current geopolitical landscape. Prolonged conflicts in the Middle East, tensions between global superpowers, and the ever-volatile Russia-Ukraine situation. These aren't just headlines. They're catalysts driving markets into chaos. During times like these, silver's role as a safe haven asset shines. Investors flock to it when currencies waver, economies falter, or political instability looms. Why? Because silver isn't tied to the whims of governments or central banks. It's a tangible asset, immune to inflation and geopolitical manipulation. And it's not just individual investors. Central banks and nations are quietly accumulating precious metals, including silver, as a hedge against systemic risks. This growing demand reinforces silver's status as a store of value that thrives when uncertainty reigns. But here's a question. As these risks continue to escalate, could silver's safe haven demand outweigh even its industrial uses? The answer could reshape its future and your financial strategy. Let's delve into the bigger picture next.
Unfortunately, for some countries, that might be the next step in the pyramid. And if it's going to be, there's not much that can be done to stop it. At least from my perspective. I mean, if you're a mover and a shaker, and you have a lot of influence, then you can set up a local economy that uses real money, or even, let's not think so loftily and just uses paper currency between people in a local economy scale. And maybe you could do that as long as the cash isn't outlawed. So, I mean, in terms of protecting yourself from digital currency, you could do that. That's possible. But I'm not that worried about it, because if you imagine digital currency as the next step in the pyramid, which is what it is, right? Let's take a step back for a second, right? Speaking from an economic praxeological Misesian, perspective here, there's no difference economically between the digital dollar that we have now and a central bank digital dollar, or the rupee that the digital rupee that Indians have now. They have, they have phones, they have the internet, they have, a digital number in their bank account that isn't backed by paper rupees. They have a digital rupee already. It's just what they call a digital rupee is just a better way to track financial transactions. So we're not talking about a new currency here. We're talking about a derivative on top of an existing currency that's just really good at spying on you, and spying on everything that you do. So look, on the one hand, this is terrifying. It's very terrifying. I would stay away from central bank digital currencies, meaning blockchain, government-controlled blockchain. It would be a better word for it. It doesn't, central bank digital currency kind of obfuscates the issue. We're talking about a government-controlled blockchain where they can see everything that you've ever done with this dollar, or anything that anyone's ever done. I would avoid it as much as possible, but I wouldn't let it get to me and think that another layer in the pyramid can stretch out the system much longer. You build another floor on the pyramid, it's going to make it even less stable. So I'm hoping these things do not last very long. I'm hoping that everything ends before they really gain any traction. And the more traction they gain, the faster it's going to fall. And then people say to me, well, Rafi, what if they try to stop inflation by saying, well, you can only buy a certain amount of stuff with your digital currency or whatever, and they really try to clamp down on that? Well, I mean, look, hyperinflations have happened before. Governments do not like it when that happens, and they try to clamp down on it in any way. And they do that in Argentina. They did it in Weimar, Germany. They said you can only spend this much amount, but however they try to control it, it never works. So just because it's digital currency, it's going to work? No, the market will always find other ways. If, let's say, the government says, well, you can only buy a certain amount of meat or a certain amount of vegetables with your digital currency because prices are moving too fast, well, then the market will clear with some other form of money, like gold and silver coins. I mean, that's, if anything, the more that they try to control the central bank digital currency, the more that they're encouraging other forms of real money to come out and take its place in the black market. The black market always wins because the black market is the real market.
And central banks attempt to patch things up. More money printing, more debt, and more fragile promises. But history tells us that no fiat currency lasts forever. And today, we're closer than ever to the end game. What happens when this system finally collapses? Governments might try to introduce alternatives like central bank digital currencies, CBECs. But here's the catch. CBECs are essentially Fiat 2.0, with even greater potential for surveillance and control. Would people trust them? Or would they look for something truly decentralized and stable? That's where silver comes in. It doesn't rely on any government or bank. It's real money, tangible, finite, and time-tested. As fiat currencies falter, silver's role as a universally recognized asset becomes even more critical. From barter systems to black markets, silver is already emerging as a parallel currency in some regions. But could silver truly replace fiat in a decentralized future? And what does this mean for those holding it now? In the next step, we'll explore how to prepare for this seismic shift.
It's interesting. I haven't really thought that through yet. I only found this out a few hours ago. I think on Twitter, maybe. Somebody shared a Bloomberg chart of Chinese interest rates, 10 years specifically, just like plummeting. I think it's like 1 point something percent now. And if you look at a chart, it's just falling through the floor. So just as rising interest rate is a signal that monetary conditions are tightening, the currency supply is starting to contract or at least grow a lot more slowly. So falling interest rates are the exact opposite of that. There's something going on in the Chinese central bank, the People's Bank of China, and they're either printing a lot of money now or they're about to, and the market is front running that and waiting for the PBOC to move forward and really stimulate. What that means is that China is going to have a lot of inflation. Their prices are going to go pretty high, and the prices of Chinese goods are going to have to rise to compensate, and Americans are going to have to pay more for their imports, and they're going bankrupt as well. So, or they already are. So I just think it means that the process of bankruptcy, with China being the supplier and US the consumer, right? If interest rates are going down in the supplier country, prices are going to go up for the consumers as well. So it's just another part of it's another plank of the global hyperinflationary stew that is bubbling, and it will explode pretty soon, within months. I hope. I don't know, but I hope, so we can just get on with it and move on.
If the collapse of the fiat system is inevitable, the question isn't if you should prepare, it's how, and silver is at the center of that strategy. First, let's talk about stacking. Accumulating physical silver, whether it's coins or bars, is a practical and time-tested approach. It's portable, divisible, and universally accepted, perfect for trade or preservation during economic instability. And unlike fiat, silver doesn't lose its value when the system collapses. But preparation goes beyond just owning silver. Diversify your portfolio with a mix of precious metals and focus on tangible assets that aren't tied to the financial system. Look into ways to protect your investments from government overreach, such as private vaults or decentralized trading platforms. Building a community is just as critical. In times of crisis, networks of like-minded individuals can provide support and trade opportunities, especially as systems break down. Skills like gardening, repair work, and resource sharing will become as valuable as silver itself. Finally, think long-term. This isn't just about surviving the collapse. It's about thriving in the aftermath. Silver isn't just a hedge. It's a foundation for rebuilding wealth and stability in a decentralized future. Now, let's pull it all together and reveal why silver is not just a preparation tool, but the cornerstone of a post-fiat economy. Stay with me for the conclusion.
I'm hoping. It's hard to tell the difference between thinking and hoping, because I've been looking at these numbers for so long and tracking the craziness of the world in tandem with inflation and seeing everything happening together for years now. And I just want it to be over so that we can save the planet and build from the bottom up again. Right? What are we dealing with now? Drones in New Jersey. No one can tell us what these things flying in the sky are. I mean, there's like momish bona fide UFOs now, and nobody knows what they are, and nobody will tell us. So could things get even crazier? Yeah, I hope they don't. I hope we just end this and go back to a sound currency already. The best thing you can do besides stacking is again, you want a community of sane people. You want to keep your head in this crisis. So you want to be able to talk to people, bar b'inayim, as they say in Hebrew, like, man to man, and be able to express your real thoughts so that you're not self-censoring all the time and worried about what you're going to say. We already see this kind of leg lifting in the United States with the election of Trump. Not that I think that Trump is a savior of anything, but I do think he is symbolic of a major sea change, that the era of censorship and the era of fear, it had a grip on us for a while. It wasn't as bad as the Soviet Union, thank God, which I think is very much thanks to the American spirit, which is still libertarian. It's a libertarian spirit, and it's still alive, and they could not quash it. America was strong enough that with the totalitarianism hopefully at its peak, which was somewhere around 2021, I think. And it has, a little bit flare ups with Biden trying to start World War III in his spare time. But it's, but basically, what I'm saying is, I think the worst of the totalitarianism is over, and I think we're headed down into the financial crisis in a much better mentality as a country and as Western society. And there's still a lot to deal with, but I think the worst is over. Not financially. I think the worst is over spiritually, and I think that's a gift. So maintain a small community. Keep in touch with people who keep your mind balanced, and for yourself, keep stacking and keep a list of people and their skills at hand so you can call on them when you need them. And most importantly of all, just stay calm and realize it'll be okay in the end. It will.
So where does this all lead? The longest yield curve inversion, a looming recession, rising inflation, and the inevitable collapse of the fiat monetary system. It's a perfect storm. But in the midst of this chaos, silver emerges as a beacon of stability. Here's why. Silver is more than just a safe haven. Its unique dual role as a financial hedge and an industrial powerhouse places it in a league of its own. Whether it's insulating wealth during economic collapse or fueling the technologies of tomorrow, silver's value endures. And as fiat currencies falter, silver's intrinsic properties make it indispensable. Unlike digital currencies controlled by central banks, silver is decentralized, tangible, and immune to manipulation. It's an asset you can hold in your hand, trade across borders, and rely on when trust in the system evaporates. The bottom line? Silver isn't just a bet against the collapse of fiat. It's a bet on the future of real money. By positioning yourself now, you're not just preserving wealth, you're preparing to thrive in a new economic paradigm. So, what are you waiting for? Don't just watch history unfold, be ready for it. Subscribe for more insights on navigating this uncertain future. And remember, this isn't financial advice. It's preparation for survival.